Well, that 1% tax on stock buybacks went into effect at the start of the year. And since then, President Biden has committed to raising it further.
Corporations ought to do the right thing. That's why I propose we quadruple the tax on corporate stock buybacks and encourage long-term investments. They'll still make considerable profit.
Of course, that was from the State of the Union. Warren Buffett, though, he's given buyback critics some pushback in Berkshire Hathaway's annual shareholder letter this past weekend, calling them, quote, either an economic illiterate or a silver-tongued demagogue. Not sure which category he would put the president in. Maybe both. Unclear. Let's get to Raymond James, Washington policy analyst Ed Mills to weigh in. Definitely, Buffett is not alone in pushing back against that buyback negativity. Ed, I mean, is there any realistic chance in Washington that we could see an increase on that buyback tax?
Julie, I give it a low probability, but I think that really what this is about is setting up a straw man. That as we get into the debates about the debt ceiling later this spring and early into the summer, Republicans have said that they want to kind of talk about our fiscal house in the United States. And what Biden will say is that, they talk about this, but they're not asking Chevron, that just announced a $75 billion buyback, to pay a penny more. And so he's trying to set up that contrast. So I don't think it happens, but I think it's going to be more part of the conversation, Julie, than I think the market anticipates right now.
Okay, and so with the market's anticipation of how it may move forward, what does that do for some of the CEO or the board calculus right now and what they're communicating even ahead of a furthering of this movement from Washington?
Well, I think it just is the economics here. I don't think there is a CEO or CFO who should make a decision about their capital management based upon a 1 or even 4% kind of cost to them. That this should be really about what is best for capital management long-term for the company. Clearly, part of what this is trying to do, Brad, is to move more capital management to dividend distribution because that gets taxed. And so really the conversation is, how do corporations run themselves? And is there a way for the United States government to tax that activity? That's really what they're trying to do here.
Ed, it's so fascinating with this administration. I mean, a lot of administrations are like this, but perhaps this one uniquely so, in terms of pushing back on American corporations and setting them up, perhaps setting up certain issues as straw men, as you alluded to. And then on the other hand, doing things to help. I'm thinking of the CHIPS Act in particular in this case, opening up the grant process for $39 billion being allocated. You highlighted that in a recent note. I'm going to be talking to the Commerce Secretary about this very issue. How much is that going to be an economic driver? Obviously, it's longer term, but how important do you think it is?
Yeah, Julie, this is so fascinating because, oftentimes we look at government as being more of a stick and regulations being a negative. But in the last 3 years, when you put together the infrastructure bill, you mentioned the CHIPS and Science Act, you look at what was in the American Rescue Plan or the Inflation Reduction Act, and I've added up at least $1.5 trillion of real carrots to industry, Julie. And I think there's an argument to be made here that the United States is at the beginning of an industrial renaissance, not the way in which we normally think about this, but really through two lenses. One, through a national security lens. And so if we as a country have identified a national security risk, such as TSMC, they produce all of the leading semiconductors in Taiwan, that's geographically really vulnerable. So let's invest here in the United States. The other area is on climate. The Inflation Reduction Act, I'm not sure if I believe this, but the estimates is that if this all gets done, that's a 30% reduction of emissions by 2030. You would have never gotten a Congress to vote for that as a stick, saying U.S. businesses must reduce these emissions. But by having so many incentives on clean energy technology, you might have that policy play out. So it is a really fascinating change in terms of the way DC, especially the way Democrats in a area where they've been demagoguing on anti-corporation activities, to have these provisions. and have an industrial renaissance potentially here in North America.
And so, Ed, I know it's not even March of 2023, but how much of that industrial renaissance also will only accelerate further, or is kind of hinging on what the results of the general election in 2024 look like?
So I would take it a step earlier than that. I would say how much of this is hinging on a potential permitting reform or energy bill that gets passed in this Congress, because the Inflation Reduction Act was only step one of being able to do any of this. If you can't have the permitting, if you can't have the transmission being built to get this done, it doesn't matter what the 2024 election will look like. A lot of these goals will not occur. So perhaps the thing that I'm watching the most here in DC, is there some consensus, especially if there is a spike in commodity prices? Republicans really want to do an all of the above energy bill approach. You might actually get Democrats, you might get the Joe Manchins of this world on board if it furthered the goals that have already been so heavily invested in.
Ed, I'm curious also to go back to that sentence that you said, the United States is in the beginning of an industrial renaissance. I mean, that's probably something Joe Biden would like to rerun for election on, right? That's a pretty good line. Do you think that the Democrats are capitalizing on their achievements enough for that political push?
Yeah, it's a great question. And I do think that it's absolutely a line that he'd like to run on. I don't think that they have sold that enough. And I do think that one of the questions that they've had in times past, if you remember, Joe Biden was the head of the kind of big stimulus bill at the beginning of the Biden administration and all those shovel-ready projects. And you go a couple of years later and, the shovels haven't actually dug any ground yet. And so this is an administration that seems to be cautious in the way in which they sell things, because they don't want to overpromise and underdeliver. And so what I'm watching this year is, are we going to see even things that build upon this in biotechnology, in clean energy technology? And once the foundation is fully laid, that's when they start in the 2024 election really running on this.
To what extent is the industrial renaissance in the U.S. also contingent on what the geopolitical framework looks like over the coming months and even the next 2 years?
So I think the geopolitical framework is one of the biggest catalysts here. We look at the vulnerability of Taiwan, and we get the Chips and Science Act. The next thing I think we're going to focus on is that we've identified 50 critical minerals for the production of a lot of this clean energy technology, other very important national security items. And we get more than 50% of that from China. There's 12 of those 50 critical minerals that we get 100% from China. So that's going to be driving this. And I think that when we layer on Russia, Ukraine, it questions whether or not the world order that has existed for the last generation can continue. And so we have to look at things through a national security lens and say, what is the supply chain? If it gets disrupted, do we have what we need here in the United States? Does a neighbor have it in North America? Does a friend have it in Europe? And that's where we invest. It doesn't matter about widgets or if shoes are manufactured in a certain place, but if it's a true national security issue, that is going to get investments. And that's where we're going to see a lot of carrots being developed, not only in this administration, but I think potentially in a bipartisan way through Congress.
Raymond James, Washington policy analyst, Ed Mills. Ed, great to get some of your time this morning. Appreciate it.